Hello guys and welcome back to my channel. Today we're going to be going through some Q&A questions that people have asked me on Instagram. Make sure to go follow my Instagram right here. So guys, do like the video at the end. Make sure to like, subscribe, all that good stuff. And then make sure to check out the live stream London session every single morning. We're there every single morning crushing it at the moment. Let's get them up, boy. Okay, I'm stuck at the break-even stage. What are some steps I can take to become profitable? Okay, break-even stage. This is a very, very good stage. Why? Because you're not losing any money anymore. Okay, you're hitting break-even. This is a very, very good thing because you're not spaffing all of your money away, and it makes life much easier. But it can be quite frustrating because you're not making any money. The whole point is to make some money, right? But think of it just as a restaurant. What you need to remember is if you're, getting at the end of the week and you're at break-even, what are the things to look at? You don't just sit around and just look at the air and go, oh, I hope my trades get better. I hope I'll make some more money. No, be logical. You're taking some trades. You took some losing trades, you took some winning trades. They both can be analyzed very, very well. And you took some break-even trades. They all can be analyzed. Losing trades. Why did you take that losing trade? Was it a time frame? Was it a time frame that seems to be not working so well? Was it a session that wasn't so well? That normally helps a lot in terms of trying to find the little discrepancies and why you're taking them losing trades. Was it an impulse trade? Was it the setup that you'd taken? Maybe an impulse trade are not working for you. Sack them off. That's exactly what I did. Going back at your losing trade is going to give you that confidence to take those losing trades, away. What you've got to think about as well is managing your trades. Even if it's a losing trade, you need to remember no one has a 100% win rate, okay? So when you do take a losing trade, was it a losing trade that you accepted? Was it a losing trade that was in your strategy and it just didn't work out? And did you manage correctly? For example, for me, if I get a 30-minute that closes against me, I'm going to manage my risk by moving the stop loss to that current low or high. If I do that correctly, then that's it's a win-win. I'm managing my risk. Was there any other ideas for maybe I could have got out a bit earlier? For example, maybe 15-minute breaking of lows. So going through the journal, going through your trades taken is going to help you really, really fine-tune them losing trades to either eradicate them completely in terms of maybe an impulse trade or a trade at a bad session time, maybe at the end of the day, or just trades that you didn't really manage properly because you were hoping it got back to your entry and pushed. You need to get that data, and that comes from backtesting. Go on the backtesting sessions, and I bet you right now, if you get a candle closing against you, which is strong, you'll see most times, 8 times out of 10, you're going to lose the trade. So what's the point of holding full stops when you can close, that full position in maybe half of what your stop was and you save some money? These are always fine little tuning things which help you get profitable. In terms of your winning trades, what you've got to do is look, did I close early? Did I not run them maybe as position as I should have? Did I just close spontaneously with my emotions? Was the zone clean enough? Should I have ran a bit longer? Should I have waited for maybe a 30-minute closure to close some of my positions? These are all things that you've got to look at. Now, how do you look at it? Either go into your journal and look at the trades, what actually happened, and also going to the backtesting software. I've got 2 backtesting softwares that I'm going through right now, and I'm going to give you probably another video and some time to tell you which backtesting software to use. But for the most part, go back on a backtesting software and take a look. Go through it your day in terms of maybe go a month before, 2 months before, or a year before, and see if it works out. Get that data, write them all down, and see which trades were working and which trades were maybe not working. Were you holding your trades on long enough? For example, I found out on simulation sessions that a lot of the trades that push, if I get a 15 or 30-minute candle closing when I'm in profit and I'm in a trade, they all make top wicks after or bottom wicks after. So if I know that I'm in some good profits and the candle's going to close, well, I'm going to close some of my position over here because I know the next candle can sometimes retrace. And that's just from backtesting. We did it hundreds of times, and it gives you that confidence to then start to manage properly in terms of either closing sooner or letting candles run. For example, another part of it, I learned that when the 4-hour, the daily, the hourly, and the 30-minute are breaking lows, previous candles, all at once, you get a nice drive as long as the zone's clean. I know that, so therefore, in them cases, I'll hold the trade on longer because I know it works because of backtesting. So backtest, backtest. That's all you've got to do in terms of getting past that break-even stage. Looking past at your losing trades, looking at your winning trades, and looking at your break-even trade. Did you put break-even too early because of emotions? Get that confidence from backtesting. Okay? So, where the fuck's my phone gone? Oh my god, where is it? Where the Oh my god, this is what ADHD does to you. Okay, which time frame the best to trade on gold? In terms of my strategy and where I want gold, pre-London, London Open, pre-NY, and NY Open are the best times to trade gold at the most volume, Pre-London gives good moves to get in early and hold the whole day. I've always realized that. An NY session, huge volume. You can only get some nice drives and easy 10, 15, 20 pips there. But yeah, make sure to go and look yourself, right? Go and get that data yourself. There's no point me telling you. You know, you're going to base your whole strategy because Max said that 8 o'clock open at London Open is good for gold. No, go back and get it yourself, okay, guys? Next question from Sanchu. How to mark zones? Very, very simple. I'd say, well, it's not simple at the start, but it is when tying it on. It's probably the easiest part of my day, just marking my zones up. What you're going to do is find zones in terms of zone 1, zone 2, zone 3. That's only what I kind of picture, okay? Zones are made up of resistance and a support, okay? Draw them on the 30-minute time frames. Make sure that resistance and support are on the body of the candles. So the body, not the wicks, the body. I've got loads of videos on YouTube showing you how to mark zones, I'm pretty sure. So make sure to go check that out. But very, very simple. Mark them out in zones and then find which zones are most interesting to you. Are they clean? Are they big enough? Do they show direction with higher time frames? And then you obviously pick the zones that you want to trade in and leave the other zones. And that's what I do all day. Start of the stream, I find the zone that we're probably ranging in. I wait until we get a break above or below another zone. Is the zone clean enough? Yes, then I'll take it. If not, then I'll leave it. Very, very simple. I'm now above beginner level. What books or courses, etc. are good for intermediate level? Well, obviously in terms of the mentorship over here, the mentorship will sort you out in terms of getting past that extra level, looking at more harder entries, looking at more where volume times are, going through the simulations. So for me personally, the mentorship obviously is a beautiful option. In terms of other people in the industry, Don would have has a great course, I'm pretty sure, and had really good reviews on that. People have told me. Obviously Raja Banks. And them two, I'd say, are the only people really with courses that, you know, I don't really have a course, I have a mentorship, but these two have courses. I'd say that them two there have the best, you know, feedback that I've heard. So yeah. And also 10 Pips Daily. I'd say 10 Pips Daily has got a great mentorship going on. So I'd recommend him as well. So guys, I'll put them all down below, but they're all the links for these guys. Really, really good people. But yeah, in terms of my mentorship, has loads, 50 plus webinars that go through the simple things of price action trading. So the next question, do you place stop and limit orders so you get in at the right time, or manually place orders? Yeah, so I use stop limit. So I use buy stops and sell stops quite a lot of the time, just for the fact that I normally wait for candle top wicks or bottom wicks. And then a sell stop means that I don't have to worry about manually executing. I know that when price gets to that level, it's going to flip me in. And that kind of avoids you from getting in too early when you're like, oh, it's going to push now. I'm worried that it's going to stick past my entry. So you get in early and then it actually hasn't broken the low yet. And it causes a lot of things. But if you have a sell stop and a buy stop, it makes, so for example, if I'm looking for buys and I get a 30-minute closure above, I wait for the low wick, then I've got a buy stop on the flip. It means I'm chilling, you know? I'm just thinking right now, when my buy stop I've put on, all I'm thinking about is how I can manage this trade, which is the good part of it. You need to be able to think about how to manage your trade instead of worrying, oh, I need to get in now because there's 1 pip away from the flip and maybe the spread might not tap me in and then liquidity might put, you know what I mean? These are all these things that are just such a pain. Just have a buy stop, have a sell stop, makes life much easier to get into the trades if you can obviously get the bottom wick or the top wick in your instance. But yeah, I find buy stop, sell stops great. I use them all the time, especially in the signals group. It's much easier. Normally in the signals group, I'll say, right guys, I'm looking for a trade in 15 minutes time. Then I put the signal out and it's obviously a buy stop or a sell stop normally. So they have time to get in as well. So it's much easier for people to follow on signals as well. What setups do you like best? For me, it's closure back in the zone. I'll put a picture of it here. A sell closure back in the zone is my favorite trade. A lot of the times I double risk this because of how powerful it is. It normally fills the zone up after it's faked out. So this is also called a fake out. Normally, if it actually fakes out the Asian high, that's normally my favorite move. The Asian high, if we close above it and then we close back into the zone fills, even if the zone isn't that clean. It happens a lot on GJ. And it's a trade that I double a lot of the time because of how high win rate is. I'm pretty sure it's 88% win rate from last year that I went back testing on. So that is why it is my favorite setup. Why did you start trading and when did you know you wanted to pursue it full time? Why did I start trading? Because I found it very entertaining. I thought it was fun. I could, click a button and make some money in my bedroom at such an early age. I started when I was 15 or 16. But also for the fact it's very interesting. When things are moving, it means stuff's going on in the world. You know, I found it really fascinating that one news event can move 4 different charts, all because of X, Y, Z. It was all about the economic side that I found really, really enjoyable and satisfying. I got into this trading thing when I was younger, when there was no one on Instagram flexing Forex bullshit. It was just straight up me looking at a chart and, wow, this is pretty interesting, you know. I used to buy Apple a week before the keynote opened. When the iPhone launched, I would close. And that was like a nice little fun thing that I did when I was younger, and that's what kind of got me hooked. I was like, wow, this is sick. I just made like 200 quid and I was just sitting around in my bedroom. So yeah, I loved it. That's how it kind of got me hooked over here. And why and when did you know you wanted to pursue it full time? Well, because when I finished university, I got offered a couple of jobs, graduate schemes, and I was looking and they were paying you know, a decent amount, but I was making like double or even treble as much as the graduate schemes were offering at the start. So why the hell would I leave a job where I work better, you know, 4 hours of the day, really, 6 hours of the day probably now, but back in the day when I was starting, you know, I was doing London Open, doing NY Open, I was done for the day. So why would I go from a job that has so much free time to do stuff that I really enjoy and then pays 3 times as much than a shitty job where I get my ass beat all the time and I normally get kicked off at the end of one of them 4 the big 4 firms. So yeah, I just thought for me personally, I'm gonna go for trading. I had a lot of money reserved from the funding talent, and I decided to just go full time, and it worked out pretty nice. Full time now for like 1.5 years. So next question: what type of strategy do you use? Smart money concepts. So question mark. Smart money concepts, trend lines, patterns. I use one sort of trend line from gold, which we put into the mentorship, I think maybe 6 months ago. A gold 5-minute trend lines, which work nicely. But for the most part, I use support and resistance. I use purely price action, and I only look at candlesticks. I don't give a shit about any indicator, anything with like that. It's all horseshit. If it was that good, why wouldn't everyone use it? Okay, use your eyes. Your eyes are the best indicator. And that's what I've been taught. When I was learning from Raja and Ted and all them people, they never used trend lines, and they were never using indicators and patterns and smart money concepts. So I learned from the best, and why would I change it? Best advice for a 19-year-old trader. First one, do not change your leverage to over 1 to 100. Okay, because sometimes when you get like, oh, I kind of want to risk a bit more, and you put that bitch to 1 to 500 and you start over risking, that's when shit hits the fan. So that's the number one. Number two, don't rush the process. Take your time with it. Life is a very, very interesting thing. Do not rush the process. Make sure that your studies come first, right? Don't think that trading, oh, I'm gonna drop out of school, I'm gonna be $1 million Warren Buffett trader. No, that's stupid. Keep your doors open. Trading is a side hobby, and when things get, you know, interesting later on in life, then take it, you know, seriously. But at the start, just focus on learning, focus on getting consistent, and then you can start to think. But really keep with school. Make sure you get that all done. That's what I did, right? I'm not one of them pussy dropouts. How to trade with a full-time job? Well, full-time job, it's hard, it's painful. You've probably got gaps in the middle, maybe a lunch break. That's probably a time that you could look for it. And then obviously outside of work, find the times that you're not at work and you have a little gap, maybe a 1 or 2 hour gap. Go on a backtesting software, see if there's volume in them times, and then backtest a pair and get started. You know, that's all you got to do. There's always volume in times. There's volume in Asian sometimes. There's volume everywhere apart from the end of the day. Okay, apart from like fucking 7 o'clock till close, it's pretty dry. But find those days that you can potentially do it, that you can potentially maybe have 1 or 2 hours, and then go from it there. 2 months of consistency are enough to go on a live account. 100%. I think 2 months is a consistency. Sounds good for a live account. I wouldn't put a massive amount in. Just start with a live account, because what will happen here is you'll go through the motions that you'll never feel on a demo, which is, you know, losing your own money, that adrenaline rush when you take a trade. You know, it's a lot of emotions that you have to go through. Don't whack up and think you're going to do the exact same as you just did in a demo. You're not. Go through a very small account, or an account that feels realistically, account that feels large, account that feels okay, but not too much, okay? Because for the most part, people that join live will lose their money in the first 2 months. So make sure to remember that. How to know where the best zones to take the partials. All you gotta do to take partials, I think they're saying, when is the best time to take my first TP1, okay? Now, for me here, you got 2 options. A 1-to-1 is a great example to take some nice trades off, especially if the zone, a zone is decent enough. If the zone is incredibly large and you have huge volume, then just look to the left hand side and look where the last time price struggled, and that is your first TP. Okay. This is very, very simple. You just got to look to the left hand side. If you ever think about where am I going to take positions off, look to the left hand side. What did the last candle show me? So there we go. Did a couple of Q&A questions. I didn't want to make it such a large video. I wanted to keep it short and snappy, but there's a couple of questions for you guys. I hope that actually helps the people that asked me them, and I hope it actually helped a lot of people here. If you guys did enjoy the video, make sure to like, subscribe, all that good stuff. I'm going to be doing a lot more of these videos. I've got a good tripod now. I've got a good setup. See you later, and peace out.